All right, we're good to go.
Okay, great. So we have 2 votes for W-2. Is there anyone who's on a 1099? You're going to be filing as an independent contractor and you need some advice on all of the amazing things you can write off so you pay less in self-employment taxes?
I see a little hand
Yeah,
raised.
hand.
Charles.
Okay, good.
And you never know, like some people might be graduating from the Tech Academy soon and not know what their employment status is going to be. So it's probably useful to give advice for both.
Great. Yeah, so I'll just kind of cover both because honestly, my favorite tax style is having a mix of W-2 and 1099s because with the Tax Cuts and Jobs Act that Trump enacted in 2018, he took away the ability to write off your expenses when you're on a W-2. You used to be able to write off your miles. If you were an airline pilot and you bought your own uniforms or dry cleaned them, you used to be able to write those off. You can no longer do that. So currently, if you are a W-2 employee and you have a lot of expenses, just sucks to be you. So what you can do, especially if you have a skill like coding, is have an additional income on a 1099, and then you can take those expenses. You pay for your cell phone anyway, you pay for internet anyway, you have a home office most likely, and you can't count any of those on your W-2. But let's say you made $1,500 of side work, you could probably expense $1,500 and you're not going to pay any taxes on that additional $1,500 of income. So I love the mix of W-2 and 1099 because when you're a 1099 employee, you're not thinking with taxes throughout the year. And then what can end up happening is you do your taxes in, let's say you're super good and you do them in February because you're amazing. And you're like, wow, I made $100,000 as a 1099 employee and I owe $30,000 in taxes. That can be really, really painful. But if you also have been on a W-2 throughout the year, you've been having taxes being withheld, and it can offset those taxes owed from your self-employed income. So it's a good mix to do both. If you don't have the opportunity to be on a W-2 and you're just self-employed, I really recommend doing estimated tax payments. They're due 4 times a year, and they are due really horribly, ironically, on April 15th. So on April 15th, you owe your taxes and your first estimated tax payment. Hooray. And then June 15th, November 15th, and January 15th. And these are actually not recommended. You have to do them. The IRS is a pay-as-you-go system, and you are supposed to be paying taxes as you earn money. When you're on a W-2, that's so easy to do, and your employer just takes it out and pays the IRS for you. Hooray. But when you're working for yourself, you have to have that self-discipline to set some money aside and then make those estimated payments. A good rule of thumb is like 15% of your total income that you make from self-employed should be set aside for your estimated payments. Another thing that a lot of people wonder is what kind of expenses can you take as a 1099 employee? The people I deal with the most are usually YouTube creators. So they have like crazy questions like, I had to buy 10,000 pounds of gummy bears for a video. Is that tax deductible? Yes. Yes, it is. So let's say you're not buying 10,000 pounds of gummy bears because you're not Mr. Beast, and you had to buy a new mouse for your computer. Keep that receipt. That is 100% tax deductible. The rule of thumb is if an item helped you earn income, you can write it off. So let's say you had to go on a trip to Salt Lake City and you did a job there and made $5,000. keep that plane receipt, the Uber from the, airport to your hotel, whatever you paid at the hotel, the coffee that you had to buy in the morning to like be awake enough to do the job. The key thing is that you can correlate a receipt with income. God forbid any of us are audited, but the IRS specifically looks for expenses and asks what income did that expense create. I did sit through an audit once, and it was a really amazing experience to see what they approved and what they didn't. And an expense has to be necessary and ordinary. So necessary. Let's just say that your job is you run a mobile dog grooming business and you go to people's houses and you groom their dogs. And obviously necessary would be a car and shampoo and clippers. Ordinary would be maybe bags to put the fur in. What they might disagree with is, well, I really needed to buy, I needed to upgrade the seat covers in my car. But I bet if you could show that you had dogs in your car and so you needed the upgraded seat covers so their claws wouldn't like scratch your car, you could take that expense. So whenever people ask me, can I take this expense? I always say, prove to me that it made you income. And if you can do that, if you could argue that expense to the IRS, I shall put it on your tax return, because that's all they care about. Do they have proof that this expense made you income? So Scott just asked an amazing question of how do you keep your receipts? I am super old school and I have envelopes for every month of the year. I don't recommend this system if you're not an old lady. You can actually get QuickBooks self-employed. I think it's free or $9.99 a month. And you can take photos of your receipts with your phone and it will automatically save those receipts into QuickBooks. There's lots of scanner apps as well. If you are going to be self-employed and you project making significant income, 100% worth it to invest in QuickBooks. I'm not sponsored by them. I should be because I love them so much and I constantly recommend their product. But it's so easy to lose track of your expenses. And at the end of the year, you're trying to compile everything. And we're already in a crunch about taxes and it's no one's favorite thing. And you're already sitting there hating your life doing taxes. So you are going to miss expenses if you haven't categorized them throughout the whole year. Save yourself a ton of time. It is worth $9.99 a month. And just get QuickBooks self-employed and hook it up to your bank account. And it's so easy to categorize all of the different transactions. That's really what I recommend. I recommend that honestly, even if you're not self-employed, because so many times we're spending money and not realizing it. And if you have a financial goal, actually seeing where your money went every month is kind of scary, but it can be eye-opening to go, oh my gosh, I am never going to have, a trip to the Maldives if I'm spending $40 at Starbucks every month. Just actually confronting your finances and your money can be scary, but it's also very empowering to be able to do that. There is another option called mint.com, which is awesome. Again, made by the same people who makes QuickBooks. I swear to gosh, Intuit, sponsor me. And mint.com is free and you can put your budget in there and it'll show you like in a pie graph of, hey, this is where you spent all your money. So I also really recommend mint.com. Maybe that more so for people who are on a W-2. You don't care so much about the expenses for tax purposes, but you'd like to be able to kind of be on top of your money better. And then I just wanted to touch on a few things in case people haven't filed their taxes yet, because you do have until October 15th if you filed an extension. So the IRS did create an exclusion for unemployment. If anyone got unemployment in 2020, which I think like 50% of the country did, the first $10,200 of that is not going to be taxable to you if you made less than 150,000 total in the year. Some states have agreed with this, some have not. So if you live in California or Oregon, you're super lucky because your income, your 10,200 is not going to be taxed in those states either. If you're in New York, I'm sorry, New York decided to count it as income. Just be aware of that and put all of your data in. The other thing that your tax preparer is going to need to know, and it's the main thing people have failed to provide to me this year, is your stimulus payments. They're not income, so don't worry about that. But if you didn't get one, or maybe in 2019 you had a higher income than 2020, and so you actually got a lower stimulus payment than you should have, if you put all of that data into your taxes this year, you can actually get the stimulus you didn't get as a refund. So it's really important that you provide that data, either if you're doing your taxes yourself or you're having someone do them. If you have no clue how much you got, just look in your bank statement in like April, May, and then January. If you really can't find it, you can go to irs.gov and make an online account, and it'll tell you how much your stimulus payments were. That's just a key thing that is different this year, and you're going to need it for next year when you file your 2021 as well, because there has been stimulus this year. Another thing they're doing this year is they are giving some families advanced child tax credit, and they've increased the child tax credit, and they're actually going to pay people throughout the year $300 chunks for their children. I'm not a fan, mainly because you're going to get to the end of the year and do your taxes, and that credit that normally would offset income and give you a refund, you will have already used, and you may not think of it. And $300 in your pocket now might really impact you later on. So if you do get some of those credits, then just keep track of them. Then someone asked, what if I already filed? Yeah, I'm sorry. Man, I had several people that we filed their taxes, and then the IRS was like, hey, we've decided to make this, excluded income. What they've told us is don't amend. They know, because they're the all-knowing, all-seeing IRS, they know who had unemployment, and they will calculate your correct refund and then give it to you. Good luck to you. They are really slow on refunds this year. As of January 1st, they had 3 million unprocessed tax returns from 2019. I have no idea why, but during the pandemic, the IRS was not categorized as like vital workers, and they were home. So all the mail that was sent to them, all the returns that had to have a person review them, just piled up. So when they all went back to work in maybe August, September, they had, God, I think the thing I heard was 20 million pieces of mail sitting there. It was crazy. We filed some extensions by paper for people, and they got letters once the IRS started going back in of like, hey, you didn't file an extension. Here's a penalty of $800. And then we're like, no, we filed the extension by paper. And then 5 days later, we get a letter saying, we've received your extension. So it's crazy right now. It's still crazy. So if you have filed and you're waiting for your refund, the other thing that is very confusing is the CARES Act, where they allowed you to donate up to 100% of your income. I don't know who you are who's doing that. Bless you. You're amazing. But there are people who had rollover. Like if you don't, let's say you donated $50,000, so you're incredible. You're like Bill Gates, and your income was only $25,000. You can only count up to 60% of your income in a normal year. So you would really only count 13,000, and 12 or 38,000 of your donation would roll over to the next year. So when the IRS said, oh, 100% of your income can be donated, it was very confusing for people who had rollovers from the previous years. The rollovers are still being treated as only 60% of the income. Again, I had many people who are waiting on their refund and then got less refunded to them than expected with no letter, and it's a mess, guys. So if you are waiting on a refund, again, they're just really slow. If you haven't filed your taxes yet, the best way to ensure that you will get your refund rapidly is to do everything properly. Put in those stimulus payments properly. Don't guess at what you think you got. You know, if you got unemployment, make sure you have your 1099-G that actually gives the amount of unemployment, and it has the state ID number and all of that. If you put in the proper data, your return will be processed faster than if there's questions. If you have children and you're getting the earned income credit, an actual like human being reviews those returns. I had no idea, but those will always take longer because there's a lot of fraud on the earned income credit where people claim kids that like don't actually exist. So a human being reviews those returns. So just be prepared. The states are being super fast with refunds. Most people are getting their state refund in, I don't know, 10 to 12 days. So at least you can get that while you're waiting for the IRS refund. Is there anything else? We have a smaller group, so I'm happy to like do one-on-one questions. Like this is your moment to ask a tax person free tax advice. Normally you'd be paying your person, what, $150 an hour? Yes, Douglas. Raise his hand.
Can you hear me?
Yeah.
Great. Devin, first of all, thank you for spending your time. I was going to put this question in the chat, but since you said, you know, we have a small group, you can go ahead. I'll just ask you, if after graduation, I become self-employed, so I'll go from a W-2 to doing my own taxes. Like you said, we need to do that throughout the year. How can I put this question? Personally, I would rather have, what are some best practices, general advice, so that a person filing their own taxes can make sure that the payments they send to the IRS are large enough to cover any taxes that may be owed, and they're not receiving a huge refund at the end of the year? I'd rather have that money available throughout the year. Does that make sense?
Totally. And you are very smart. There's people who are like, woo, I got a huge refund. But the truth is, you've just given the government an interest-free loan all year. So yay you. You could have put that into Bank of America and made 0.003%. I'm just kidding. But yeah, the rule of thumb is, and this is where having something like QuickBooks and knowing at the end of every month, what is your profit? Because your profit is what you're taxed off of. Let's say you make $100,000 in a year and you had to buy $10,000 worth of supplies. You hired a subcontractor for $15,000 and you had $5,000 of travel expenses. You have $70,000 of self-employed income. Here's the thing about self-employed income that hurts. No one is paying Social Security and Medicare for you. When you have a W-2 job, it just comes out of your paycheck. You don't even see it. You're like, la, 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 okay. I netted this much. But that's because as an employee, you pay 7.3% and your employer matches. When you're self-employed, no one is helping you pay those taxes. So you actually owe 15.3% on top of your federal tax bracket. So if you made $70,000 profit as a single person, you're in the like 23% tax bracket plus 15.3%. You're now paying 39% of 70 grand. That's $27,300. So that sounds terrible, right? It is kind of terrible. And that's the plus and the minus of being self-employed. The beauty of being self-employed is you can do what you want, when you want, you work when you want, you work where you want. You're not like punching in at a time clock. There's a lot more freedoms, but with all the freedoms come barriers and rules and restrictions. The other great thing about being self-employed is that 100 grand, if you had made it on a W-2, your taxable income is 100 grand. But being self-employed, you were able to write off all of those other things. So that's where it gets extremely important to monitor your receipts and to know the categories that you are allowed to take as a self-employed individual. Because I guarantee you could get that 100 down to like 40, you know, like that's the game when I work with my clients. Obviously, we stay within the parameters of the law. We are not defrauding the IRS. My motto is pay your fair share, but not a penny more. So keeping your receipts, tracking your income throughout the whole year and not trying to do it in freaking February or April, or even you've extended. So now you're in October of the next year and you're trying to figure out your expenses. Forget it. You're going to pay way more in taxes than you should have because it's now a year ago that you made all those purchases. So at the end of every month, look at your profit, figure out 15% of that, and set it aside for your estimated tax payments. And then when you have that estimated tax payment due, just pay, put it in a savings account so you can't touch it, and then just pay it. I have definitely seen people save up for their estimated taxes and then we're like, I decided to go to Hawaii. And I'm like, oh my God. Because then they get to the next year and they owe, 20 G's, and it's a lot harder to come up with 20 G's at one time than it was to maybe come up with $6,000 4 times throughout the year. You know what I mean? So just track it throughout the year. That's the best solution to everything. And when in doubt, Google is your best friend. There are so many self-employed people that you can literally Google like key self-employed deductions. And there's a million articles for you to just educate yourself and know, can I take this expense? So I hope that answered your question. Aha. Okay. Let's talk about LLCs. Man, I'm not a fan of LLCs. Let me tell you why. They mean nothing in terms of taxes. You pay the same taxes as an LLC that you do as a self-employed individual. The only reason I would say do an LLC is to protect yourself from a lawsuit. So if you are engaged in a business that someone could have some sort of damage, yeah, do an LLC. They can't take your house if they sue you, etc. But a single member LLC is essentially just a self-employed individual. And that has become very confusing for people. And they're like, why do I owe self-employment taxes? I'm an LLC. And I'm like, aw, you cute little guy. No, like people just don't understand or they've gotten bad advice. What actually starts changing your picture for taxes is what's called an S Corp. And the S is just a letter the IRS has given to it, means nothing. So you have a C Corp, which again, just a letter, means nothing, or an S Corp. And when you're an S Corp, you do pay yourself on payroll, but like, let's say you made 100 grand, you paid yourself 25 G's through payroll. You've only paid that 15.3% on 25 G's. The other profit from your company, let's say there's another 40 that you take as a distribution, none of that is going to be taxed with Social Security or Medicare. It's a distribution. And all it will be taxed is on your federal and state income levels. So I've done the math, and once you start making more, like a profit above 50, you save money switching to an S Corp. You know, you will have extra expenses like having a payroll company. Gusto charges $20 a month to run your payroll, and they will pay all of the taxes for you. They'll do all the tax reporting for you for the payroll. It's the best $20 you will ever spend. Please don't try and do payroll yourself. Even I screw it up. So if you're really serious about being self-employed and you are like, I want to make a ton of money, really look into switching to an S Corp, because that is going to save you just tens of thousands of dollars on that 15.3% in taxes. Yeah, you do not need to have another employee for an S Corp. If you pay yourself, that is sufficient. You have to at least pay yourself. And then Scott asked about the tuition paid to the Tech Academy. This is a genius question. So let's say you're on a W-2 and you have all this income, and you have all this money that you spent on your training. There's nothing you can take except for the student loan interest. Isn't that sad? But again, it becomes that W-2, you don't have the opportunity to take the expenses that are aligned with making that money. If you're self-employed, your tuition, there are a lot of rules on this. You can take more of it, but it is like a gray area. What you're better off doing is applying for the American Opportunity Credit or the lifetime learning credit that will put money back in your pocket for having paid for higher education. One of those requires the education be part of a degree program. So the Tech Academy probably doesn't qualify. That's the American Opportunity Credit. The Lifetime Learning Credit, you can take for up to 4 years in a row, and it can be any sort of education that you got. So everyone here, if you have paid for the Tech Academy, make sure that you look into the Lifetime Learning Credit. And here's why I love credits. A credit goes directly against the taxes you owe, as opposed to simply a deduction, which lowers your taxable income. So a credit is going to give you $1 per dollar better lowering of your taxes. For example, let's say you owed 4 G's after you did all your stuff, but then you had a lifetime learning credit of $1,200. You now only owe $2,800 in taxes. So make sure that you take that credit. You only actually get to count the credit for money you paid in that year. So most schools will send you this form, and I'm going to throw out some numbers here. It's called a 1098-T for tuition. You must have a 1098-T to enter to get that lifetime learning credit. Very, 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 very worth it. And it will help you. And someone even on a W-2 can take that learning credit. So that's something anyone, any form of income can count. And if you're a parent and you have kids in college and they're not filing their own tax return, you can take that credit for the money you paid for their college. And in fact, if they're in a 4-year school, you can take the American Opportunity Credit, which is a better one and will give you a bigger credit against your taxes owed. Thank you, Scott. Any other questions that anyone has? About to file your taxes, have a question? I can help you.
Well, Devin, it's really good information, and we appreciate it. What would you recommend for somebody who wants to get more educated with taxes? I mean, your help is definitely great, but just, I mean, there's a lot to learn. What would you recommend for like additional learning?
So go to like TurboTax, because they have some of the best blogs on these areas. And if you Google like self-employed deductions, the #1 answer is something on TurboTax or H&R Block. There's also so many schools now online, like Udemy, or however you pronounce it, Udemy, and they have tax classes for $25. You know, I did do a VidCon talk, and it is on YouTube on the VidCon channel, and that is specifically for self-employed people. And I had like a whole bunch of slides. So if you are self-employed, if you're looking for more information, go check out that talk on the VidCon channel, because it was really just an hour of talking about how to save money on self-employed taxes. But yeah, there's so many resources online. It can be slightly overwhelming, but TurboTax or H&R Block websites are a great place to start.
All right, good stuff. Thank you. And another question I had too is, if someone is hired full-time as, say, a developer, and but with their skills, maybe later on they want to go full-time on their own and with their own business, would you recommend starting your own business now, even if you're just doing a little work during the year, just for tax purposes?
I mean, I really would, because you will get into the habit then of keeping your receipts. And also, I want to say this in a way that's not going to get me in trouble, but you could, like, let's say you made $2,500 self-employed and you had various expenses. The beauty of being self-employed is you spend money on life anyway, and a lot of those can count as self-employed expenses. So you could actually have a negative income from your self-employed, and it would lower your overall income, and you'll get money back from the taxes that were withheld from your W-2. The IRS does keep an eye on that, and if you have negative income 3 years in a row from a business, they could start denying that business as a business and call it a hobby. If something's a hobby, you can only zero it out. You can't go negative. But very often when you're starting up with all the starting up costs for the first 2 years, you are going to be negative. So go ahead, start your business, take on some freelance clients, be negative for a few years, get some of your tax money back, learn the ins and outs and the goods or the bads. You know, just, I think it's better to be self-employed and make a little bit and kind of learn some lessons before you're like, well, I just made $250,000 and I'm totally screwed. You know, just practice with that. Oh, I made $5,000 this year self-employed. It's a lot less scary, but it's all the same rules that apply.
Got it. Thank you.
Yeah,
And
but
Scott,
don't go starting an S Corp yet. Don't do that. You're going to waste money. Start an S Corp once you make more than 50,000 profit only. There.
Got it.
Yeah.
Scott's really playing you up here, Devin. So are you taking clients?
You know, I am, but I will warn you that mostly my partner is doing the tax returns, because my real job is I'm the CEO of Braille Skateboarding, and it's kind of a giant job. But I love taxes so much, I would never stop doing them. And I have like a passion and a purpose to help people not pay too much to the IRS, which is why I love doing things like this. And then there was a question, what's my background? So I used to work for a CPA in Multnomah Village, and I went to school and got my accounting degree. I've been doing taxes for 10 years. And my really good friend, Aaron Cairo, had started this company called Braille Skateboarding. And in 2013, he was like, hey, I'm going to make 30 grand this year and I don't know what to do. Can you help me with my taxes? So then I started working with him and I started doing all the accounting, and we kind of built the company up together. And I still do taxes, but my main thing is running that company. So never worked for any of the big four in accounting, just a small CPA in Portland.
I have a question. It's a little less like grounded in practical application, a little more theoretical, but I'm just kind of wondering what your view on our tax system is in general, basically like in terms of, A, does it need to be as complicated as it feels like it is? And B, like, are there other tax structures that you think would do well to be adopted here, like VAT and other things? I'm just kind of curious if that's too much.
No,
and too
it's
broad.
fine. I actually took on a new client last year, and she is a business manager for a lot of people in Hollywood. And a lot of them, believe it or not, live out of the country. So I got to learn a whole new element of taxes, and I learned all about how taxes roll in Canada, England, New Zealand, and it made me realize that our tax system, as flawed as it is a heck of a lot better than England. And as a self-employed person, you're going to pay about 54% of your income in England.
Wow.
And they say like, well, you get, the country-sponsored health insurance is not worth 54% of your income, let me tell you. But I do believe that it is made purposely difficult to understand as a way. Money has always been used as a way to control people. If you can control your money, you have power. And the government, however you want to look at it, does enjoy being in power. And taxes are one way that people are kept in line. How many of us get a letter that says IRS on it and our heart like, and it could even just be like a, hey, happy holidays from the IRS. It doesn't matter. You are freaking out. And that is purposely created. So knowledge is power. Even if someone else does your taxes, you're signing them. So understand what you're signing. Understand how they came to that number. Because when you get audited, the liability is not on me who did your taxes. It's actually on you. You signed that return. So the more you can understand about why those numbers came to be, the better. What are the chances of getting audited? You're probably more likely to be struck by lightning, but I've known two people so far who were audited, one a corporation and one a private individual, and both times they had big red flags. And so this is why I love freetaxusa.com, H&R Block, and TurboTax. They all have audit risk analyzers. And having a Schedule C is a red flag because a lot of people don't understand the Schedule C. A lot of people try and take personal expenses as business. It doesn't mean you're going to be audited just because you have a Schedule C self-employed income. But just keep your nose clean. And if you're audited, be able to come out of the audit going, haha, that was amazing, What the person who did her audit, she did come out of it totally correct and vindicated. The corporation that I helped came out of it owing 90 grand. So they did not have their, act together. Just make sure you understand what's on those taxes. And even if you are audited, it's not a big deal. Obviously, if you did something wrong and you intentionally cheated, you're going to sweat that audit. Oh man, cryptocurrency. I was waiting for someone to ask about cryptocurrency. It used to be a sweet deal on cryptocurrency. It used to be that the IRS wouldn't tax you until you had turned the cryptocurrency into cash. When you buy and sell stocks, let's say you sold Apple stock and bought Tesla. I don't know who you are. You're not me, but great for you if you bought Tesla stock. You're going to owe money. Like, let's say you bought Apple at $50 a share because you're incredible, and you sold it at $300 a share. That's a $250 a share profit. Let's say you had 10 shares. That's $2,500 profit. Even if you didn't take that money and you rolled it into Tesla stock, you owe taxes on that $2,500 gain. Cryptocurrency used to be the sweetest deal out there because they used to not treat it that way. You used to only get taxed on it when you turned it into cash. They just changed that 2 years ago. It is very difficult to track your cryptocurrency and difficult to track your basis, which is how much you've paid for it, versus the profit. I really recommend using Zen Ledger, Z-E-N Ledger, because they track every sale that you do. And it is very helpful to your tax person and helpful to you because you'll know your actual cost, because again, you're only taxed on the difference between your cost and what you paid for it. So Zen Ledger. Health insurance. Guess what? Even if you're a self-employed person who's not an LLC or an S Corp, you can write off your health insurance. There is a line on the Schedule C for self-employed health insurance. You don't have to be a corporation to write off your health insurance. Can't write off your family as a self-employed person. If you had an S Corp and you put your wife on payroll and then her health insurance came off her payroll, you can kind of do it that way. But as a self-employed person, you can take yourself. So there you go. And then I just missed that question from Ricardo because I'm Italian and I was talking with my hands. So.
It says, are you hiring for your tax business?
Oh man, I'm definitely not. I'm trying to stay small just because so much amazing stuff is happening at Braille this year. We launched an app, which is why we hired Scott. And we have a mobile video game coming out in July. We have a line of toys in Target. The Olympics is happening. Skateboarding is going to be in the Olympics for the first time. We have our first skate shoe coming out in July. I really shouldn't even be doing taxes, but I love them. So that's what I do in my spare time. Yeah.
Important question here, Devin. Do you skateboard?
Oh man, I can push around. I am. The boys really want to teach me, and I'm thinking of making a series of we taught our boss to skateboard. So we'll see. Maybe coming to YouTube near you.
That would be some awesome content. I love that.
That'd be a great channel.
Yeah. 40-year-old mama too. Can I stay alive?
Flipping in the half pipe.
Yeah, we have a vert ramp now. So I'll just go down the 11-foot vert ramp, whatever. I'll do a 900. Yeah.
That would be impressive.
Me and Tony Hawk, we're like this. Oh, this is a really important question. Unsold inventory. You can't count it. On cost of goods sold, it's exactly what it sounds like. Cost of goods sold. So let's say you spent 10 grand on inventory and at the end of the year, your value of inventory is still 8,000. The only thing you're going to write off as a cost is the $2,000 worth of inventory you're sold. And it comes back to the IRS rule of like, where's the income associated with that expense? Do you know what I mean? So there you go.
So Devin, with healthcare and being your own business, is that 100% that you can write off?
I mean, put in the total and then the tax program calculates what it's going to give you. It does come off your income, but it doesn't lower your self-employed income. It is really dumb how they do it, but you'll still pay the 15.3% on the income before the cost of the healthcare.
Got it.
Yeah, it's annoying. It makes me mad.
All right. Does anyone have any other questions for Devin?
Ooh, charts for depreciation of assets. Dang, we're getting deep here. Yes, there definitely are. IRS.gov, scariest website in the world, does actually have those. If you type in and it'll even tell you what the asset categories are. Different assets depreciate over different lengths of time, right? A computer is 5 years. You can even let's say you bought a new MacBook Air and it's $1,250. You can write off that whole expense in the 1 year. Anything under a certain threshold, $2,500, can be written off the same year it was purchased. If you know you're going to have more income in another year, you could depreciate it and then take the expense in the year that you have income, but you could also take it in full that first year. Anything else?
Do you have any questions for Devin, Kenzie?
Not other than my very general question. I am lucky that there's weird stuff with my family and me, so I don't personally have to handle my taxes, which is a very, very, very lucky situation to be in. I'm very grateful and privileged to be in that situation. So a lot of this is over my head, but it is something that I want to be more aware of. I think at some point I'm probably going to have to take the reins on that one and have more understanding of what's going on there.
Yeah, it's just really good to know the information for yourself and to feel confident in it. Mackenzie had a question on, can she write off a laptop from 2 years ago? Yes, is the short answer. The long answer is maybe. You've used it for 2 years, so you have 2 years worth of personal use. You won't write off the full amount that you paid for it. A laptop is a 5-year asset. So take the cost, divide it by 5, minus 2 of the years off of it, and then take the 3-year remaining expense on your taxes. That's the long answer. Aha, office space. Oh my gosh. See, guys, office is the biggest misreported expense ever on self-employed taxes. The rule is if you use that room for any purpose other than work, you cannot claim it as a home office. So if you're using your bedroom, sorry, Charlie, none of that space can you take. I recommend, even if you're like, this is a tiny corner of my living room, take it, put a desk there, use it for no other purpose than work. And then you can at least take 5 square feet, which is better than taking no square feet. But if you have a guest room and there's a bed and once a year your mother-in-law stays in it, you've just lost your home office deduction. Ridiculous, but true. I don't make these rules. If I did, you would be able to count it. Just know that your kitchen table ain't a home office.
What if you also do yoga in that extra room?
Don't do yoga in that room. Or if you're asked by the IRS, say you do your yoga in the living room. I mean, I wonder sometimes, how are they going to know this? Who is going to say,
hides Buddha statue?
Right? And who's going to say, well, I did use this computer to order pizza from Papa Murphy's, so I guess this computer is now not a tax deduction. Who is going to say that, honestly? But just know that, see, yeah, guys, you've already figured it out. 100% you need to be writing off that cost of your Bay Club membership or whatever, because, you know, you're trying to not have carpal tunnel and you got to work out. Like, yes, you're getting it. This is what I'm trying to teach you here. Coffee is a valid office expense, y'all. Oh, that's one more thing for this year. Meals and entertainment are usually 50% only being counted. In this year, because they want to encourage people to go back to restaurants and help the economy, it's 100%. It's never unprecedented. So if you went to Starbucks, I don't know why I keep saying Starbucks, I hate their coffee. If you went to Pete's Coffee or Insomnia, Dapper and Wise, let's get Portland here, you keep those receipts. Instead of 50%, you now get 100% of what you paid. So take advantage of that. Another amazing thing that you can do by being self-employed, go, have lunch and take it off as a business expense. You can't do that with a W-2.
And one last question from you, Devin. What's a good way to find a good tax accountant? I had a great tax person that retired like 5 years ago, and I've been bouncing around to different places since. Some are really expensive, and others are just not. They don't care very much, and they don't really look into what you're doing. So that's kind of the issue I'm having right now, is finding another good tax accountant. The one I had before was awesome.
Yeah, it's really word of mouth. And you're more likely, really good tax people usually are totally full and are not taking new clients because they're so awesome and everyone wants to stay with them. Ask people that you know for recommendations. I would never go online and find a tax person because you can't trust them. You don't know who they are. I personally would never go into H&R Block. The people who prepare taxes there usually have minimal training, and they charge twice what I charge. I couldn't believe that. I was like, dang, I ain't charging enough. Charging Scott double. But yeah, really word of mouth. And, different tax people have different specialties. My specialty is small businesses and self-employed. But, the CPA I worked for, his specialty was trusts and estate taxes. I would suck at those. So really finding the person whose specialty is your actual needs is important. Ooh, that's a great idea, Ricardo. Yeah, a lot of the professors who do the tax classes or accounting classes at like Portland Community College probably do have side tax businesses. Asking actually on Facebook, people, that's a great way to ask, because people have the people they love or they know a friend or whatever who's doing taxes. So yeah.
All right. Anybody else with any questions? We've got really good advice from a tax professional here.
Ooh, Douglas.
Devin, this one just popped into my head, obviously, but I'm thinking as a W-2 employee, I may have 3 or 4 jobs somehow, so I'm getting like 3 or 4 W-2. If you're self-employed and you have a side gig and then you take another job and another job, so now you're doing like work for, say, 4 different entities, would you need to keep all of those receipts separate for tax purposes, or could you group them together and turn them all in as a group to the IRS? What would be best?
Well, if you have expenses from your W-2 job, can't really count them. You know, the cool thing about also having your self-employed thing is like your cell phone, internet, you can count now, whereas before you couldn't. One thing too about having multiple W-2s is you might go over the Social Security threshold. Like once you make $137,000, you stop having Social Security withheld. But if you have all these different jobs and they don't know that you made this over there, you might have too much withheld. You will get that refunded to you on your tax return. I would keep all the receipts separate and note on the receipt what it was for. And then at the end of the year, you can go, okay, this I can count, this I can't count. And not even the end of the year. You know me, the end of the month, you would be doing this I can count, this I can't count. You know, when in doubt, don't count. That's because you don't want to end up in the situation that you took something you couldn't, and then you just have that random time you got audited. It's not worth it. And then Mel had a question about if you don't have the receipts for the inventory. As long as you have some proof of payment, find the credit card statement, find the bank statement from when you bought them, and you have that initial cost, you're okay. You just have to have some sort of proof of here's what I paid. If you paid in cash and you lost the receipts, I'm very, very disappointed in you. But, you know, it's probably not the end of the world if you found the current cost and then made a note. Again, the likelihood of you being audited is very low. So if you do your due diligence and you do as best as you could to reconstruct it, most likely that's fine.
Well, thanks for coming out, Devin. We do
Yeah.
appreciate it. That's been a great talk.
Yeah, that was awesome. Very fun. I love this.
I knew you'd make it fun.
Yeah, and you know, you can email me, maybe. I'll try and answer your email, maybe. I do have an email just for the tax practice. And here's a little crafty thing. So it's uglypugtax@gmail.com. And I name my company after my dogs so that when I pay for their grooming, it's tax deductible because they're on my business cards and my Christmas cards. See that craftiness, guys? That's the level you too could get to.
That's awesome.
Yeah.
And that was uglypugtax@gmail.com.
Yep.
Is that one G or two G's?
Just one.
Got it.
Yeah.
Love a little ugly pug.
Yeah. Yeah. The data I gave should be relevant to every of the 50 states because, you know, we're federal. Utah might have different rules, but federal taxes are same state to state, and the self-employed taxes are the same state to state.
Thank you so much for your time, Devin.
Yeah.
This has been really great and really interesting. I'm like, maybe I should look more into taxes.
Yeah. I mean, honestly, anyone can enroll at Portland Community College, your local community college, and everyone has an intro to tax class. Not a bad idea. Get your lifetime learning credit from the expenses for that class. But yeah, just educate yourselves and you will thank yourself down the line. I also want to put a push for retirement accounts. It's a really good idea, guys. And, you know, you can contribute $6,000 to an individual retirement account, and that comes right off your taxable income. If you don't need a big write-off from your taxable income, consider a Roth, which is actually named after a dude, Philip Roth. And when you take the money out, it's not taxable, including all the earnings in that account. So you won't get any tax break when you put the money in, But let's say you're like, I can contribute $1,000 a year. That won't make a difference on my taxes. I'll do a Roth. 40 years from now, let's say with the earnings, there's 60 grand in there. When you take that out, none of it is taxable. So I know it seems crazy to think about retirement, but I have seen many different people's tax returns in the age bracket of 65 to 75. And it's very sad when someone's only income is Social Security. It is very difficult to survive on that. So think now, $500 a year now into a retirement account could make a huge difference, and you can be smart and have it help your taxes.
And I think finding a good tax accountant can be priceless.
Yes, exactly.
Well, thank you so much. If there's no other questions, we're a little bit past 2 o'clock, so I don't want to take any more of your precious time, Devin. You sound very busy, and like a lot of people rely on you for a lot of important stuff.
Yeah.
I do want to let y'all know about next week. We're going to have tech interview office hours with Chris Ling. So focusing on technical interviews in that job application process. And I'd love to see y'all there. And I will put my email in here too, if anyone needs to reach out to me for any reason. And really appreciate everyone for joining in today. Douglas, is the raise hand new, or is that an old one? Okay, sorry. Just didn't want to cut anyone off. But yeah, thank you so much, Devin. And thanks for everyone that attended.
Yeah, that was great, Devin. Thank you.
You're welcome. Bye. Good luck,
Thanks,
everyone.
Thank you.